Hello everyone. Today we are going to discuss another panel stock which is named Madhav Infra Project Limited. Looking to the company pricing, so the price is around 11.4 rupees per share. If we look at brief introduction about the company, so the company is incorporated in 2010. Uh, it is in the business of infra development and solar power generation. It is a part of Vadodara-based Madhav Group, which has undertaken in the fields of energy, real estate, mostly in the infra business. So it has various business divisions, as we all have seen that energy, then infra, then real estate. Also, the revenue breakup, if we look at, then the revenue comprises of 68% is major share of revenue goes to civil contracts, then vessel contracts received, and then other services that comprises of less than 10% of revenue breakup. However, looking to the order book, so they have an order book of 666 crore rupees, uh, which includes that 15 megawatt solar EPC project of at Vaga, Gujarat, awarded a post order book date. Also, the company has been declared as a bidder in the two projects, that is around 14 crore of the amounting around 14 crores. The company has won the various contracts and the projects in last few years, so it shows that the prospect of company seems to be good. Also, the Ahmedabad and NCLT Ahmedabad order an amalgamation of their wholly owned subsidiary to the company itself, and the company is now the resultant entity. Uh, if we look at the other factors, so the other factors include market cap, which is around 308 crore rupees. It shows that it is a purely a nano cap company. PE is around 14. If we look at the PE of median PE, so the median PE is around 21, but the PE of the company is 14. It shows that the company is undervalued in terms of pricing. Book value is around 6.99 rupees per share. Uh, it means the net worth of the company is around 7 rupees, but the pricing of the company is around 11.4 rupees. If we look at the ROCE and ROE, so ROCE is around 13% rupees and ROE around 12%, which shows that the company is having double digit in their ROCE and ROE both. If we looked at the pricing pattern, so in last 6 months of data, the company has reached its peak at 15 rupees per share and currently pricing at 11 rupees 40 paisa per share. It shows that the company has shown a momentum, which is, if we look at the 3 years of data, so the company has being in the range of 7 to 8 rupees from so long period of time, and which has reach its peak at 15 rupees in February, 25th January, and currently pricing at 1140. So it shows that the company is at uh, company. The pricing of the company is at stable situation where the company is uh, where the companies still have some potential to go upside till the resistance is not breached, and also company is far ahead from their support level. So the company is the company is near to their resistance level, and the company shows that, and it shows that the investors are giving having confidence in the company. That is the reason why the investment has peaked right now in last 6 months of time. Looking to the pros and cons of this are system generated, and that will be explained by me later on, don't worry. If we look at the March 24 data, so the company is having around 150 crores of sales, which is a quarterly sales, but if we look at the operating profit margin, so the operating profit margin has seen a dip, and that is the reason why the operating profit is around 9 crores only. If we look at the other factors like net profit, so the net profit is around 2.76 rupees per share, 2.76 crore, which is around 4.10 paisa per share. So if we look at however, if we look at the yearly data, so in March 24, the company has seen a dip of more than 53 crores as what it was in a year ago in terms of sales. But still, the company manages their operating profit at the same level what it was in March 23 because of the increment in the operating profit margin, and the operating profit margin has been increased by 2 more percent, which resulted in the companies earning a decent amount of operating profit despite a dip or low in the sales numbers. If you look at the net profit, so the net profit is around 23 crore rupees, which is which can be which is a good number, because in a previous year there is one other income which is included, and that is the reason why their profit is so high, huge in numbers. However, if you looking to the 23 crores and with the other income of less than 6 crores or around 6 crores, so the current year the company has shown a tremendous profit. And if we exclude the other income portion, then the company is, and if we exclude the other other income portion, and solely from the EBITDA, I would say the company is having one of the highest EBITDA in last 10 years of data, which is something which we treasure a lot for a company like this. If we look at the sales growth, so the sales growth is around 7% in 5 years term, and the 19% in 3 years term. So the growth has been increasing, but in last, obviously, as we all have seen, that the company has seen a 53 crores of downward sales, or down round in terms of sales value, and that is the reason why 12 months data shows 10% of dip. But if we look at the profitability growth, so the profitability growth has shown a tremendous numbers. If we look at 5 years data, that is 35%, 3 years data 55%, 12 months data 35%, even though the sales has been seen a dip, but the trailing 12 months data has seen a profitability. That is the good indicator. Your sales growth, if your sales growth, if your profit growth is more than the sales growth for the relevant period, for the same period, it shows that the company is not only increasing their sales, but company is also increasing their efficiency level as well. It means that the company has increased their sales in 5 years for 7%, but the profitability for the respective year has not only increased by 7%, but it has been increased by 35%. It shows that it is very crucial thing and important thing we should look at into. It means that the company is having a benefit of learning curve, and the having efficiency in their workforce, and their material consumption, and the company is learning from their past experiences. Company is following lean management system. Looking to the 3 years data, also in 3 years the company sales has been increased by mere 19%, but the profitability has been increased near three times more than what it was in terms of sales growth. That is something which we look into. This is the minute things which we often ignore, but if we only read the financial statements, the majority of the things can be covered, and give us an overview or a prospects about how the company is working. Looking to the sales stock CAGR, so obviously in last 1 years it has given a two times of return, and that is the reason why the stock is in under the radar of various retail investors and other investors, and the pricing hits the peak in January of around 15 rupees. However, looking to the equity capital, so first we look to the corporate actions. What are the corporate actions are there? So there is no corporate action in last 1 years of time, which shows that the company is having nothing much in terms of corporate actions. And the company is having around 27 crores of share capital, and the reserves is around 162 crores, which shows that the 22 crores of increment as we compared with last year. Also, the company is having borrowing. So one of the important thing which I want to stress upon is the company hit its borrowings at 470 crores, which has been reduced to 290 crores, then 284 crores, then 252 crores, then 270, then 200, and now it stood at 153 crores. The company has consistently deleveraging themselves and paying off their borrowings. That is the important thing in infra business. Any infra company which is heavily, or any infra company is always said to have a huge amount of loan, and that is the reason why many of the infra business has seen faded to oblivion because of this reason, because they have huge amount of debt, and they do not finance their projects, and that is the reason why the business goes to insolvency and bankruptcy. But in this case, the company has consistently reducing their borrowings, and that is the plus point, or the something which we treasure a lot, which we looks a lot, because and in that also the portion of the reduction is mainly attributed to long term borrowings. It means the company is paying off their long term borrowings. That shows that the company is very sound, and the company is having a perpetual cash flows, and with only that they can pay off the loan in such a consistency, because the company has neither raised their capital in last 2 or 3 years data. The company has not raised any capital, any substantial capital, and still company is managing to paying off their long-term borrowings in such a tremendous way, where it sees a peak of 470 crores. Now it is around 153 crores. So 300 crores, more than 300 crores of reduction in working in long-term in borrowings, shows that the company is having a good prospect, and the company is consistently deleveraging themselves, and their operating cash flows are sufficient enough to pay off their entire liability. The company is not have to rely upon their other financing sources. If we look at other liabilities, so the other liabilities also seen also in the one of the lowest point, and the other liabilities is around 159 crores, which is decent enough, because the company has consistently reducing their debt. On the other hand, the company has not reduced their the company has not done any significant amount of uh, uh, I would say, a reduction in their fixed assets or something. Looking to the other factors, so the company is having around 127 crores of fixed, I would say, fixed assets. If we look at the other assets, so the company is having around inventory of 96 crore, which is in line with what it was in last 3 years on an average. However, looking to the trade receivables, so the company is having reducing its trade receivables also as well, which is a good indicator. How if we look at the trade receivables in 6 years, so that data is not available. However, looking to the cash balance, so the company is having a cash balance of 50 more than 50 crores. It shows that the company is a cash rich company, and that is the thing which in particular business requires too much amount of cash because of the capital intensive business, and it requires a huge amount of cash to pump into business. And that is the reason why often we have to see that whether how much the cash they are in their bank account or they are in cash balance. And if they have cash and bank equivalents of around more than 50 crores, it shows that the company is decent enough and having a good profile in terms of fundamentals. It is also a good indicator. Looking to the operating activity, so the companies has recovered from their receivables of 66 crores, and company has paid off its payables as well. And the company cash from operating activity is 65 crores, and this is not the case in this year only. The company has consistently managing their cash from operating activity, and the same is always in the profits zone. So it shows that the company is have company operations of the company are good, and the company is consistently working on their operations, their cash flows. Company has tightly managed their cash flows, and they have a good collective collections and recovery mechanism. If we look at the investing activity, so the investment shows that the company has consistently purchased their investment. That is something which we look into, that the company is not only having a surplus from operating activity, but company consistently investing in the other assets as well for their investment for their capex purpose. That would shows that the company is not only in stability mode, but the company is on the expansion mode as well. If we look at the financing activity, so this is something which I am always discussing about, that the company has paid majority of their repayments, lost long term borrowings, and that is the reason why the repayments of borrowings stood at around 54 crores, and the 24 crores is interest paid, which is see the interest payment is also see a consistent reduction from 59 to 39, then 34 to 32, then 28, 25, and 24. It shows that the interest payment has consistently seen a dip, and that is then attributed to the bottom line of the company, and the profitability will ultimately be increased. So that is something which we look into. If we look at the debtors days, those debtor days has been one of the lowest, around 78 days. And if we look at the inventory days, so the company has also seen a dip in their inventory days. It means that the company do not have to hold too much of inventory or pile up too much of inventory with themselves. Company consistently realizing cash from their inventories, and the payables has been also seen a dip. That is a good indicator. It means that the company is paying off their payables, but that is more than 222 days, and which is a good indicator that the company has cash conversion cycle of mere 20 days. But we look at the working capital days, and that is around 107 days. It means that the working capital of company is blocked one third in a year, and that is a decent enough. If we look at the company which is in infra business, so they have to pile up the inventory, they have to invest majority in the working capital, so that is decent enough, no worry about that. And it's seen a reduction. If we look at working capital days, has been peaked is to 275 days, then 195, then 152. Now it's stood at 107 days and 100 days. So well enough, fair enough, and company is consistently improving effectiveness and better utilization of their working capital. Looking to the promoter shares, so the promoter have sold their slight amount of stake, which is around 72%, and now it's around 68%. A mere divestment of around 4% will not be an issue, because the investment or the stake of the promoters are around 70% in the company. And the if the promoter divest any stake in the company, that will be a concern if they have a low shareholding in the company. But they are having a upper cap limit of 75% is a promoter can hold a most upper limit of 75% only, and they are near to that. And so if they have sold some of their stocks, so that will not be an issue anyway, because the company has reached its peak. So there may be a chances that they are in the booking mode, and that will not be an issue. So looking to the number of shareholders, so the retail investors has shown a participation in this stock, and that is seen in that kind of if we look at June 23, though, they are around 24,000 only, and that is the case with the all three all of the quarters. But after that, they have seen a certain dip and increment, and 20% or more than, I would say, 30% of the retail shareholders has been increased from 24,000 to then 30,000. Now 30,000 to more than 30%, it is 40,000. Now 40,000 to 51,000. It shows that the number of shareholders has been increased by 30% in a quarter on quarter basis for last sequential 4 quarters in a row, which shows that the retail investors have shown interest in the company, because the data is not given, or there is no someone who are having substantial investment in this company as a public investor. So we are not able to figure out that we are not able to figure out that will they are a long term investor or not. I will assume them as a retail investor, or a small investor who have invested their company money in the business. So it does not shows a good indicator whether or not, it is not a good indicator or something that the retail investors have increased their stake in the company, so it is a good thing or it is a bad thing. But mostly we look at that, because if the retail investors have increased their stake in the company, so it means there is a pump and dump going on. But if we look at the promoter, so promoter are having 69% of stake, then the retail invest then the total number of investors are 24,500. Now the promoter is also having 69%, but the investors has been increment of 30,632. It means that the 6,000 investors has been increased, and those and all of them are totally, and all of them are totally retail investors, because see, the Simplex Trading Company has sold divest their stake, and that is, I think, the reason why all of that is being dumped or being invested by retail investors. But after that, if we look at, there is no investor who has dumped their share, but still the shareholding pattern has been increased from 30,000 to 40,000, then 40 to 50. 30% or more than 30% of growth in number of shareholders, and that is totally attributed to small shareholders or retail shareholders. It shows that the company is not dumping their money or their shares to the small shareholders and just booking a profit, but genuinely the promoters or genuinely the investors see some prospects in the company, and that is why they have invested in the company, and the number have reached its peak to 51,000 shareholders. So this is an overview of the company. I hope that you all enjoy the video, and I hope that it will be informative to you. So there is a disclaimer that this is not this is totally a financial. This is totally an educational video solely for the informative purpose and increasing awareness in the financial literacy. And also, I would say that I am not providing any portfolio management services. So consult with your financial advisor before investing into stock markets. I hope you all enjoy this video. Thanks for watching.